Hi, everyone. Welcome to the panel where we'll discuss digital payments in Kenya's coffee sector. Before we start, I want to spend a little bit of time on introductions and setting the agenda for today's discussion. My name is Jacob Tamrapalli, and I'm an associate here at 60 Decibels. I oversee key engagements in our agriculture portfolio, and I've been helping lead the work with the Gates Foundation on digital payments in the coffee sector. I'm very excited to be both moderating the session and presenting some of the findings from our most recent study in Kenya. For those of you who don't know us, we're an impact measurement company that uses 15-minute phone surveys to listen to end beneficiaries and organizations. We then analyze this data and present benchmarked insights within weeks so that organizations can respond to what they learn. Happy to connect offline if you have any questions about our broader work. So, a little bit of context for today's discussion. In recent years, the Kenyan government has pushed to digitize coffee payments, aiming to make disbursements to farmers more timely and transparent. While well intentioned, this move has raised concerns among cooperatives and SACCOs, many of whom feel there was limited consultation before the directive was introduced. There's also some apprehension that digitization could undermine the vital role these organizations play in supporting farmers in their communities. Yet, crucially, amidst this debate, there is little representation of farmers' own opinion on the push for digitization. To explore this, we've grounded today's conversation in the voices of 271 coffee farmers from Meru, Kenya, who've been receiving payments digitally. Our goal is to better understand their experiences, needs, and priorities. Their insights reveal not just what farmers want, but also what they need to thrive in a rapidly changing landscape. Besides this, we'll also hear from our other speakers who will shed light on the broader context in which all of this is playing out. Over the next 25 minutes, we'll tackle these questions and more, so stay tuned as we dive into this critical conversation about the future of coffee payments in Kenya. Before I start, I'd like to take a moment to introduce the other speakers who you'll be hearing from. Joining me, we have Koya Matsuno, who's the co-founder and COO of VunaPay, who are enabling digitization for cooperatives across Kenya. He will talk to us about the challenges and opportunities for instant payments and digital adoption in Kenya's coffee sector. Last but not the least, we also have Catherine Rickard, who is the corporate payments digitization lead from the UN-based Better Than Cash Alliance. She will share more on what companies can think about as they consider going digital. At the end, we'd also love to hear from you on any questions or notes that you may have. A small housekeeping request, please add any questions you may have to the chat box, and we'll try getting to them by the end of the session. Great. So let's get started. Before we dive into the results, I want to zoom out a little and talk a bit more about why this work matters. So over the past 3 years, my team at 60 Decibels, backed by the Gates Foundation and the Better Than Cash Alliance, have interviewed more than 1,200 coffee farmers across Africa and Latin America. Our North Star is a simple question. How do coffee farmers being paid digitally, either by mobile money, bank transfers, or through a SACCO, actually perceive these payments? And how can shifting to digital payments help coffee buyers support their own goals while fostering responsible payment practices throughout their supply chain? Today, I'll present findings from a study we did with coffee farmers in Kenya and conclude with some recommendations that companies can help adopt to help smoothen the transition to digital payments while keeping farmer voices front and center. So, our most recent study was with 271 coffee farmers who were receiving payments digitally through their SACCO accounts. For those who are unfamiliar with what a SACCO is, in Kenya, a savings and credit cooperative societies are member-owned, locally run financial services providers that offer a wide range of financial products, including savings, loans, and payment services. The farmers we spoke to were receiving payments directly into their SACCO accounts after selling coffee to the cooperative, thereby removing the need for the cooperative to pay them cash in hand. These payments are facilitated by VunaPay, which acts as an intermediary helping route payments from the cooperative to farmers via the SACCO system. We'll hear shortly from Koya about VunaPay's experience working with both coffee cooperatives and SACCOs and some of the opportunities in digitizing payments for these organizations. So before diving into the main results, I'll just quickly touch on the profile of the farmers we spoke to. The typical farmer is 59 years old and has maintained a SACCO account for the last 15 years. So they're quite tenured with, their SACCO account. In addition to SACCO ownership, we were curious about whether these farmers also own other financial tools. We found that the 83% of farmers use mobile money regularly for expenses such as utility bills, school fees, and transferring money to their friends and families. It is interesting that farmers distinguish clearly between these two channels. So, for mobile money has more of an everyday use case, whereas the SACCO is regarded as something more secure, where farmers are able to save, access credit and insurance, and so on and so forth. We also found that farmers are pretty comfortable with both these tools, with most of them saying that they never need help using both their SACCO and mobile money accounts. And they also said that they're very confident in their use of both these tools. Moving on, we'll now see how the cooperative fared when it actually comes to paying farmers digitally. So the chart to your extreme left shows you when farmers expected to be paid versus when they were actually paid. The right-hand bars in gray display the payment timelines farmers expected. This is based on communication from the cooperative as well as their prior estimates. The left-hand bars in blue indicate actually when farmers were really paid. Most farmers anticipated payments within around 3 months, yet the majority actually had to wait 4 to 7 months for their payment. One reason for this delay is because the cooperative can disperse funds only after the coffee is actually sold to the export market, which often causes delay. It's important to note that this challenge is somewhat independent of the payment mode and cannot be entirely ascribed to the fact that farmers were getting paid through the SACCO. That said, although farmers understand this constraint, there's still a gap when it comes to expectation setting on payment timelines. These delays also significantly impact the farmers' overall experience when it comes to their payments from the cooperative. While around 40% find their experience to be good, a comparable proportion also say that their experience was just fair or even poor. Beyond payment delays, two other issues also come up in farmers' self-reported explanations for poor payment experience. The first one is payment deductions, and the second, a lack of transparency when it comes to their price. So this is in regards to the price of the coffee that they receive. So a little bit more on the first point around deductions, we found that nearly all farmers noticed unexpected deductions at the time of withdrawal. These deductions were often varied. They're likely to be a combination of bank, cooperative, and payment provider fees. However, farmers often find it difficult to distinguish between these fees since there's no clear breakdown provided to them when they finally get the bill. When it comes to price, more than half of them were actually unaware of the final sale price that their coffee got. Farmers generally depend on AGMs where the cooperative will inform them about the price that they were able to get for their coffee in the export market. However, there's no systematic means through which a farmer can access this information on demand, and hence many of them are left in the dark. Despite these concerns, digital channels remain strongly preferred. 57% of farmers, we asked farmers, what going forward, what is their preferred mode of payment? And we found that 57% actually wish to continue receiving payments through their SACCO, while 39% actually said that they'd like to get payments through mobile money. Interestingly, only 4% of them would opt for cash if given the choice. Farmers loyal to the SACCO cite three main factors: a long-standing trust and familiarity with the system, the access to easy loans that it provides, and the third one was quite interesting. It's somewhat of a forced savings effect, where they talk about how funds held in the SACCO are, less susceptible to impulse spending. So this was quite an interesting finding that we saw. Farmers who prefer mobile money actually emphasize, faster access to their money and lower withdrawal fees. And both of these are areas in which the current SACCO process underperforms. So I would say that the overarching message here is that access to multiple digital options is extremely valuable, and perhaps more valuable than simply imposing a single platform. And you can also see a couple of quotes. We ask a lot of open-ended questions throughout our surveys, and these quotes are coming directly from farmers on why they prefer one mode over the other. Great. I want to leave you with three findings from the study, which are also applicable to companies thinking about adopting digital payments. Firstly, Ensuring timely payments is key, and companies should communicate a definitive payment calendar to farmers. If market realities dictate that payouts, cannot be made before a certain date, that information must be conveyed at the point of delivery, with reminders issued closer to the payment date. This predictability will not only enable farmers to plan their finances better, but it'll also go a long way in helping them build trust with the company. So one way to sort of summarize this point is that it's not just when the payments actually get dispersed, it's about building that expectation and building, leveling those expectations with farmers. That's almost as important as when the payment actually gets dispersed. Secondly, every deduction should be itemized. So a concise message outlining the gross pay, every kind of different fee attached, and the final net pay would help eliminate uncertainty with farmers. And this level of transparency will not only maintain a farmer's confidence in the system, but also reduce complaints and disputes around the final payment amount. And finally, giving farmers the option to get paid in different modes. And in our example, in our study, it was mobile money. This can really help build trust in the technology while also being mindful of the farmer's preferences. The important point here that it's not just important to offer farmers choice, but it's also important to get cooperatives on board, since oftentimes cooperatives tend to favor SACCOs due to existing systems and are hesitant to make the switch. Ultimately, the decision must be grounded in what's viable for the farmer, and they must be fully informed of the different options available to them so they can choose what works best for their needs. In summary, establishing reliable payment schedules, disclosing deductions transparently, and providing flexible digital options are key pillars in enhancing a farmer's overall payment experience. I'd now like to invite Koya to understand more about some of the opportunities and obstacles companies face in enabling digital payments, especially in the context of working with Kenyan cooperatives. Koya, can you explain how companies like VunaPay help bridge the gap and facilitate adoption of digital payments, especially considering that cooperatives may have already long-standing relationships with farmers and may be hesitant to disrupt established systems? And secondly, also, what do you think are the primary technological, financial, and infrastructural bottlenecks that prevent the smooth adoption of digital payment systems?
Thank you, Jacob, and thank you for the opportunity for me to speak. Just briefly, at VunaPay, we're focusing on digitizing agricultural cooperatives, mainly in coffee, dairy, and maize. For this purpose of the panel, we'll be focusing more on coffee. One of the really key things that we do in order to onboard these coffee cooperatives is really to empower the existing system rather than trying to introduce a brand new technology. So going into the market as well, we have an ongoing partnership with the National Coffee Cooperative Union, which already has established trust and relationship with a lot of the coffee cooperatives across Kenya, which also makes it easier in terms of having accepted by the managers of the cooperatives, and to be able to identify which regions to prioritize. So these key partnerships through existing institution has helped us a lot in terms of onboarding these different cooperatives. At the same time, when it really comes to digitization and digital payments, one of the things that we highlight is the cost benefit to it. Making sure that it comes out clear that by digitizing, there's few upfront costs, such as digital purchasing digital devices, but at the end of it, there will be additional cost benefits, such as lower transaction fee, as well as lower operational costs. So those are some of the things that we highlight as we onboard these cooperatives. In terms of some of these tech hurdles that we usually see, luckily in Kenya, the internet connectivity as well as familiarity towards mobile money and digital payment is quite high. But even so, within the rural regions, there's a lot of places where there's still unstable electricity or weak internet coverage. So those are some of the things that we look to improve by having a solution that doesn't require as much internet or offline capability, as well as to limit some of these, minimize the data usage for the cooperatives to save money on these data-related costs. So that's more of a snapshot in terms of what we focus on in terms of approaching these cooperatives in Kenya when it comes to digitization and some of the hurdles that we see on the ground.
Got it. Thanks, Koya. That's super valuable to learn. And thanks for sharing that. I'd now like to pass the mic over to Kat, who's a program specialist focusing on corporate payments digitization at the UN-based Better Than Cash Alliance. Kat, having heard some of the challenges and opportunities companies face when enabling digital payments, we'd love to zoom out and hear from you on the broader context, particularly around scaling payment system. So specifically in less mature markets, both private companies and policymakers play a crucial role in responsibly scaling digital payments. So could you tell us a little bit more about what are some of the key policy considerations that governments and companies should keep in mind as they promote digital payment systems, particularly in the agriculture sector? How can they collaborate to ensure that farmers' voices remain central to this design?
Yeah, absolutely. No, it's a incredibly important point, just that last sentence about ensuring that farmers remain central to this discussion. Again, I think this is a hugely valuable insights that you've shared, and that we should all be taking away and considering how can we do things better for these farmers as end users of digital financial services. To that end, the Better Than Cash Alliance looks at how we can learn from experiences, how we can also work with different stakeholders in supply chains to improve those experiences and facilitate that transition to responsible digital payments. And so we've created a set of principles that look at exactly that. There are 9 principles for responsible digital payments. And I just wanted to tap into 3 that I think will be quite relevant to the findings that you've presented. And these are essentially looking at how to prevent some of those unintended consequences from the beginning, and also to ensure that the design of products and services lead to long-term usage. So the first one is around designing for individuals, and that's principle number 6. And this looks at how to make those services easy for everyone to use, given that these, particularly coffee farmers in this context, this might be their first exposure to a digital product or digital technology, as well as a formal financial product. And so it's really essential, as we move very rapidly through this period of technological advancement, not to neglect the diversity of needs, particularly of these first-time users. And so coffee buyers and local community groups have a great opportunity here to support farmers by collating and sharing data of underserved groups and understanding their particular behaviors, their preferences and capabilities to adopt these products in the first place. The survey here highlighted that in this context, there's a preference for both SACCO payments and mobile money payments. So it's essential for the farmer in this respect to have that choice. But also it's highlighted further insights that can be explored to how do we ensure that those payments are being made more timely and more transparently. So yeah, the need here is to look at how do we ensure that digital payment experiences benefit the user and improve on the current status quo so that they can shift those mindsets and habits towards digital payment usage. The second principle was around being transparent, particularly on pricing, as that point highlighted was highlighted in the findings. Again, how can we ensure that these first-time users understand the characteristics and costs of digital payment services, particularly when in the context of evolving compliance, these financial products often come with complex contracts and terms of usage. So how can we work with technology companies and formal financial service providers to create sort of more transparent and easier understanding of key features of products, such as, when it comes to privacy policies, the fees, the transaction limits, exchange rates for those who are remitting payments as well, and what to do if unauthorized transactions are happening. So it's essential to look at how to make that language accessible, making sure it's in a local language, that it can be visually appealing for those with who are less literate, and also potentially looking at voice activation. But yeah, essentially looking at how to ensure that transparency leads to greater choice for the user, but also promotes competition, healthy competition, and that long-term satisfaction and usage of products. And then the third principle I wanted to touch on is around value chain accountability. And this really looks at who is responsible, particularly when an issue arises. Given that there are so many actors in a digital payment ecosystem, from the regulators to fintechs to the buyers of coffee who are promoting the use of digital payments. So how can all of these actors be aware of their role up front, so that the clients themselves can have trust that these actors will fulfill their responsibility should there be a lost payment, a data breach, or fraudulent activity, for example. So in the context of coffee, again, roasters and retailers can help to establish and work with technology companies and governments to look at how to improve the digital payment infrastructure to ensure that those coffee users are able to benefit from those timely payments, the transparency in those payments, and addressing some of those issues that we've heard today on connectivity challenges and network issues. Government themselves, have a responsibility to improve the digital payment infrastructure. Most governments now have a digital financial strategy that they're working towards and accelerating the rollout of digital payment infrastructure, but also making sure that we're not leaving anyone behind in that context. Ensuring that there's the farmer welfare underpinning all of this. So that might also look at policy change and regulatory change, as we see an evolution in the products that are being innovated, those payment limitations or ceilings, but also consumer protection needs. As we see the greatness that can come with technology, we're also seeing a rise in fraudulent activity and criminal behavior as well. So how do we ensure that consumers are protected and that those are enshrined in regulation? So yeah, I think addressing some of the misinformation, there needs to be a role of media here, of all stakeholders that are working with coffee farmers to address misinformation, particularly around taxation. We hear that comes up as a big issue. And the value of digital payments and digital financial services that need to be greater than the current status of using cash. So I'll pause there, and I can also share with you a link to the principles for the audience so that they can have a look at those in more detail.
Thanks, Kat. That was super helpful, and especially your point around, transparency. The second principle really, really resonated with me, and it sort of also ties back to the findings that we saw in our study as well. Building off your third point on, how the government can get involved, I'd love to hear from you, Koya, specifically in Kenya, since you're based there. What are some of the policy headwinds that could potentially expedite the rollout of responsible digital payments? Particularly in the context of cooperatives, which are so dominant in the country. How do Kenyan cooperatives themselves view these changes, and what are the potential impact of these changes on farmers?
Yes, there's been a lot of exciting reforms, especially in the coffee sector within Kenya. And one of them is a direct settlement system where the intention is for farmers to get paid directly by digital methods. Now, there's pros and cons to this, but the intention behind it is for farmers to directly receive the payment and to increase transparency, as Kat mentioned as well. Now, there's also a few pushbacks from the field as well on some of the aspect of involving the cooperatives and empowering the existing system. A lot of the cooperatives seem to be concerned about losing control over their operational capability. And in fact, a lot of the farmers who's part of the cooperatives are also concerned that this policy that is intended to help them is actually going to harm them by disrupting the cooperative movement. So there's a lot of pros and cons that's been spoken, but in terms of the general direction and the intention behind this policy is to really promote these digital payments, to increase transparency, lower the cost, and to ensure fair payment. So those are some of the things that I've seen on the ground. And in relation to that, there's been a lot of push towards digitizing cooperatives as well, in order to make sure that these direct digital payment work. We need to make sure that there's a basic level of digital infrastructure. So, for example, Ministry of the Cooperatives is working to provide digital weighing scale, for example, in order to make sure the record keeping is done digitally and effectively. And one of the extra push that we've been seeing is the regulation introduced by the EU deforestation regulation, which makes sure that coffee farmers are growing their coffee without deforestation. And this actually requires all the coffee farmers to prove where they're growing the coffee. And this actually also has been pushing a lot of these cooperatives to digitize and be compliant with this new regulation. So there's been a lot of movement, and I think the general direction is headed towards the right way. So it's been an exciting trend that we've been seeing in Kenya.
Thanks, Koya. That's really helpful. I'm mindful of time, and we only have a couple of minutes left, so maybe I can answer or throw a few of the questions in the chat box to both of you. I think the first one from Jayashree about how funds held in the SACCO are less susceptible to impulse spending. I think your point is on the money there. It's harder to access as compared to something like mobile money, which is why farmers value it. And they've also been saving in their SACCOs. It's sort of a financial tool which has been used formally to save as well. So that's another sort of factor to consider.
And maybe Jacob could also add a point to that, that we've also seen in many instances that when payments are made in cash, that there are a lot of merchants and loan sharks that will come to the farms on payday because they can access that cash quite quickly. And it's very hard for farmers to walk away, knowing that they can otherwise be encouraged to spend very easily. So there is an element of protection that digital offers in terms of being able to walk away without being forced to spend on payday.
Thanks for that, Kat. Yeah, that's very relevant as well. I'm mindful that we're sort of running out of time, and so I think now might be sorry we couldn't get to everyone's questions, but now might be a good time to sort of just make a few closing remarks. I'd like to thank both you, Kat and Koya, for all your inputs on this session. This was super insightful, and if you're interested in getting in touch with 60 Decibels, the Better Than Cash Alliance, or VunaPay outside of this, feel free to sort of drop me an email. I think my email should be there on the speaker bio, but I can share that in the chat box. And yeah, thank you everyone for joining. I'm personally going to be maybe brewing a cup of coffee after this, so it's left me with some good food for thought. Thanks everyone. I'll just share my email on the chat box as well.
Thank you so much, Jacob, for facilitating.
Yeah, thank you so much.